Good morning and welcome, everybody. Excuse me. This is the Saturday morning Viper trading webinar. If you're here to learn how to trade futures markets using the Viper tools, you're absolutely in the right place. Today's topic is part 2 of a two-part series, Patiently Wait for Retraces. And we're going to mix in a little bit of correlations with that, but I'm going to keep it fairly simple. I'm going to show you how to trade gold and ES together using the correlations on retracement trades, so it's going to be pretty solid. You're going to want to stick around. By the way, if you do have to leave early, we will be recording this. And those of you that are just coming in, don't worry, we haven't really started yet. You haven't missed anything. So without further ado, let's get our standard disclaimer out of the way so we can get over the charts and look at trades, which of course is why everybody is here. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. All right, as I promised, without further ado, let's get over to, I believe it's screen 1. Oh, no. Oh, that was bad. Oh, man. I accidentally hit the stop record button. I'm going to have to do the disclaimer again real quick. I cut off the old one I just started. Welcome, everybody. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. Of course, everybody here does know that you do trade at your own sole discretion. Good. Okay. Now, let me hit the right button to get over to screen 1. Hold on. Here we go. Okay. Mohammed, when the recordings render, excuse me, it normally takes about an hour and a half. I got a tickle in my throat. Sorry about that. So this will be over around 10. So give it until noon to render. And then it's going to go up in two places before I show trades. What screen am I on? Am I on screen 1? Yeah, okay. Let me show you right here real quick before we jump into trades. And so everybody knows this. The webinar recordings for the public are located here. Go to the top toolbar, click on the webinar link page, and this should come up right here. So this was the 4th. These are all the latest webinars right here. But sometimes it takes Gary a little while to post those. I don't know, depending on his schedule on the weekend, you might get it up today or tomorrow. But what I will do for everybody is I will send you the recording link in an email. So whenever it renders, I'll put it into a separate folder on the web server, and then I'll send you a follow-up email, like afternoon. You can watch it later today or tomorrow if you want. And then Gary will get it up on the web either today or tomorrow, but it might not be till Monday morning. Okay? All right. Now, in part 1, if you've not had a chance to watch it, we discussed in detail how to interpret. Let me back up because there's some brand new people in here. Okay. We trade futures markets and we utilize intraday volatility to make trading decisions. And normally we are done trading within the first 2 hours of each morning, Monday through Friday. Gary opens the room just before 6 a.m. Pacific, which is the crude oil pit open. He is looking actively for crude oil trades. I'm sure you all know that. He's the master of crude. And so in the live room, you're going to see the following instruments. You're going to see crude oil. You're going to see ES, the E-mini S&P futures. You're going to see gold futures, which we're going to cover this morning. We used to have NQ NASDAQ futures, but it's been pretty whippy. So we took that out and replaced it with YM in the upper left-hand corner of the screen in the live trading room. And so what we're doing is, and just to briefly recap the part 1 webinar from Thursday night, let me explain it this way. We're connected to the data feed to our broker. These are 4 range bars. Each bar is 4 ticks. What we do is we trade retracements. So in order to have a retracement, you have to have a trend. So let's look at some early morning setups on these 2 charts. Here you can see at 5:30 on gold and 5:30 on ES, we get a reaction. Now, does anybody remember why we had this shotgunning effect at 5:30 a.m.? Anybody from Friday morning? What happened on Friday morning? There was a news, let me help you. It was a news event. What was it? Does anybody remember on Friday morning? What was that big news event that came out at 5:30 Pacific in the pre-market session on Friday morning? It was a biggie. It's one that everybody watches. All the economists, pretty much anything to do with financial markets watches this number. And it's a good number to be aware of when it's coming if you're going to trade futures. You've got to know this because yeah, good. Some of you got it. Good. Yeah, let me show. So we use this site right here, Forex Factory, to track financially related news events. And you can see the biggies right here. Non-farm payroll, far exceeding expectations. So the news bots kick in, and let's see what the news bots did. First of all, before we get into any trade setups and timing, what is the relationship between gold futures, GC on the left, and E-mini S&P futures on the right? What is the relationship, the correlation between these 2 instruments? Do they trade together in the same direction? Or are they opposites or mirror images of each other? Okay, take a look at the chart, both charts, and what does it look like to you? Are they following each other or are they going the opposite directions? What do you think? Inverse relationship, mirror image, or do they go the same way? Yeah, a high percent of the time, Gene, probably 90+% of the time, they are of an inverse relationship. So let's see how that works. So initially when the news came out, you can look here to the left on gold, and you can see that there was a very precipitous sell-off right in here. Let me show that to you real quick. Here was the initial shotgun news bot reaction to that huge payroll number on gold. In fact, by the way, this is an indicator that I use on my charts, and some of you use it too. It's an out-of-the-box ninja indicator called current day open high low. Now, the Viper indicators are the background colors, red, green, and this indeterminate transitional type color. Bar colors, red, yellow, and blue. We have the, for some reason, these are the power meters. They're not loading this morning. I don't know why. We have the predictors, real-time support resistance. And of course, we have the bands. 1, 2, 3, 4 below it. Mid-band, thick middle band. 1, 2, 3, 4 above it. For a total of 8. Red thin line's line 2. Thin green line at the top of band 6 is line 6. Generally speaking, if you have a red background with predominantly red bars and the bands are stair-stepping down, you are looking for short trades. You're going to sell the market at resistance on retracements. Conversely, if the market is heading up and the background is green and the bars are predominantly blue, and as you can see to the right here, the mid-band and all the bands are stair-stepping up, you are looking to buy retracements into support to get long. So the reverse happened on ES. You can see here that with this thrust, gold took out the low of the day right here, literally a few seconds into the news. See it? See the shotgunning? This is news bots kicking in. Those are automated programs. They use machine learning AI scripts to quickly interpret the news numbers, and they normally get them leaked a few seconds ahead of time, right? And then the algorithms kick in with buy and sell programs. This is true and factual, so don't, I mean, you can choose to believe it or not, but it is real and it really happens. At the same time, what happened with ES is that the algos, of course, as they should, reacted in the opposite direction, thrusting up here. Now, it did not break its highs, but you can clearly see at 5:30 it had a thrust up here out of this little consolidation area, as expected. What's interesting, though, is not necessarily the initial reaction to the news, but what happens after the news and after the news bots digest the information. Well, you can see right here on the left-hand chart of gold that you consolidated briefly after the initial thrust through the lows right here into a quick consolidation pattern like such. Let me show it to you. Now keep in mind, this is not tradable. Okay, I want to be clear about this. This is not tradable. In fact, if you are in a combine with either Top Step Trader or One Up Trader, you have to wait a minute at least. I believe it's at least a minute. It might be as much as 3 or 5 minutes. Because just to explain what's going on here, see the shotgunning started at 5:30 here. This is still 5:30 and 2 seconds. This is 5:30 and 8 seconds. 5:31 doesn't happen until all the way over here. All these bars, and there's probably, I'm guessing, at least 100, maybe more, came in 1 minute. So it's literally not tradable. Now, depending on how you handle this, could you have put a buy limit order in here or boxed it in with Object Trader and gotten long here? Yes. Notice how a similar pattern happens here, only it is in the opposite direction. So gold out of that consolidation patch, right at the end of the news at 5:31, takes off like a rocket ship, like that. See it? That same consolidation pattern on ES looked like this. Right here. Now, 5:31 on ES was right here. Right here. So, who was the leader? Here's 5:31 on ES right here. And here's 5:31 on gold. Who was the leader in the market move in reaction to the news? You have two choices. It is either gold or it is ES. Which one led the break? I'll give you 3 seconds. Who was the leader on the move after the news? GC Gold on the left or ES, E-mini S&P futures on the right? 2 seconds left. Who led the break? One second. Who was the leader? Who was the leader on Friday morning? Time's up. Gold. Good. All of you said gold. Perfect. Now, why is that important? Well, let's think about it for a second. Why do we spend so much time trying to figure out who the leader is? ES was not the leader. Let me help you out. This circle right here occurred just seconds after 5:31. This circle on the right is 5:31 on ES. So who was the follower? Well, ES's break didn't occur until here, which was 5:32, 5:33. See this break? Let me ask you a question, and this is why this is important. Could you have conceivably loaded for bear on that short on ES and had a huge windfall on this sell-off right here? What say you, team? What do you think? This break occurred a full 2 minutes. At 5:33, gold was all the way up here. ES hadn't even broken yet. ES was dinking around in here. What was this gold move portending to you? Load for bear short. Load for bear short. Right here. Right there. There it is. Can everybody see the power? I want to just pause for a second. Do you understand the power of that? Can you imagine if sitting in your chair trading these markets and somebody walked in the door of your office and came right up to you 2 minutes ahead of time and said, short ES, it's going to break down and you're going to make a ton of money? What would you do? Short the living, you know what out of it. Right. Now, let's use some round numbers. Let's say you got short at, I don't know, 40, 40 and a quarter, 40, 50. And the thing comes all the way down here to 30 and change. So this move is 10 handles. 10 handles. How much is 1 point worth on ES? Anybody? 1 point. We went 10 points, roughly, plus or minus a few. I'm using round numbers to keep this quick and simple because I got a ton more trades to show. $50 a point, and it went 10 points. So for each contract that you put short on ES here, I'm not even talking about the gold long. I'm not even talking about that. Forget about this. Just put that aside for a minute. That made a ton of money too. But let's not focus on that. Let's come back over here. ES short. Oops. What happened there? ES short plus 10 points. By the way, that's what a handle is, right? Handle, 10 handles, 10 points times $50 per point equals a 1 lot short would give you 5 bones, yes? And a 2 lot short would be 10 bones. How's that a way to start your morning? What do you think? Anybody like that? You got short at 5:33 a.m. Pacific time, and you were out of the trade by 5:37. Less than 5 minutes. On a 2 lot, you made $1,000. Just like that. Just like that. And you didn't even take the gold trade. You simply used gold as the leader. 65 In-N-Out burgers. Yeah, you could buy a lot of burgers with 10 bones, Gene. Yeah, so what I'm trying to impress upon you is this. These correlations are extremely powerful. They can help you see and take trades ahead of time. They're like having a crystal ball that's going to portend and tell you with a high degree, 90+% certainty of what's going to happen. And so you don't have to be afraid to short the ES anymore when you see that gold's breaking up like that after the news. So the news bots are pushing the gold up, and it was telling you 2 minutes ahead of time to get ready to short ES and take a big move. All right, so let's suppose you missed that. You know, you were asleep, you were making your coffee, you know, whatever, you know, you're turning on your TV, petting your dog, whatever, you missed it. Now, let me ask you this. Based on your knowledge of the Thursday night webinar where we teach Patience Part 1, Wait for Retracements, are there retracement trades after this initial thrust on ES? And if so, how many are on this chart? How many retracement short trades come after this horizontal line? Here's the apex of the sell-off after the break. Occurred at 6:36. So from here forward, I'm going to give you 5 seconds to tell the team how many retracement short trades there are. You don't have to say where they're at. You don't have to say when they happened. We're just counting them. I'll help you out a little bit. Let me push the gold chart forward a little bit to help you out. There you go. There's gold. Okay, look at gold. Let me help you while you're looking at ES. So we're counting ES retracement shorts. I'm going to help you out. I'm going to put some things on the gold chart that I'm going to explain when we're done with all this. 4 seconds left. How many ES shorts are setting up on the right there? Helping you out over here to the right, or to the left. You're looking at ES, right? You're over here. Question is, how many short retracements are there? Here's gold over here. And I'm going to show just a couple of things here, which are actually long trades on gold, right? See them? See the long trades on gold? See the retracements? ABC, up, back, bounce, mid-band, up, bounce, long, mid-band, bounce, just under the mid-band, and breaking the high of the day. Off here to the right, 3 seconds left. And we're primarily looking for mid-band retracements. Mid-band retracements on ES. How many were there? After the horizontal line at 5:36 a.m. How many gold ones were there? How many rectangles are on the gold chart? Do those times that occurred on gold happen to correspond to any retracements on ES? Are there correlations intact there? What say you, team? 1 second left. Now, I realize some of you are completely new, and you might not really know what you're looking at yet, and that's perfectly okay. I'm going to explain it in just a minute. All right, time's up. Notice how each time we get a thrust and retracement on gold, and we get a pullback, what happens on ES? Well, let's look. Let me expand this out a little bit so you can see what I'm talking about. Here is the thrust in the new trend direction, which is now down. So some other things to make note of as you're trading this mentally in terms of what your vision is that now the background on ES is dark red and solid, right? Bars are predominantly red. Midband and all the bands are stair-stepping down like such. The inverse of that is happening on gold. The background is green. Most of the bars are predominantly blue. You're continuing to get a series of higher highs and higher lows approximately, and the midband and all the bands are stair-stepping up like such. So you're clearly in an uptrend on gold. So you are buying support on retraces. There's one right there. There's one right there. There's one right there. Okay? Let's take a look at ES. Would you not agree that right in here, there's a retracement that kisses and rolls right off the midband right here? So there's short trade number one. Midband, textbook, kiss and roll. Short number one. We come down, we challenge the swing at 30 even, right here. You buy to cover and you stop on a trail, right? We get another kiss and roll right here, textbook, right off the midband, short. There's trade number two. That turned out to be a good one. Not only do you get the scalp down to here, so the scalpy's scalp one, scalp two, and you get another chance to get in here. This is a minimum criteria trade. So if you called that as a short trade, that would count. But if you were counting mid-band trades, it would not. So if you're counting, a minimum criteria trade, I'm not going to get into a lot of detail on it, but very simply in the short case, it's when the market comes into just above stealth, the sneaky snake line, and line 2 into band 3, which these bars do. So this is considered a minimum criteria retracement trade. So if you said 1, 2, 3, you were correct. I'll give you credit for that. If you were counting mid-band trades, you only got 1, 2. Okay? This was a beautiful pop down and broke the low of the morning. This one alone, if you got short at, say, 33, you went all the way down to 24. That's 9 handles. 450 a lot, yo. 9 bones on a 2 lot. At the same time when this was happening, let's take this minimum criteria trade. 632. What was gold doing at that time? So right in here at 632, 633, ES was in the process of breaking its low of the day. Now, at that same time, let's look where gold was. When did gold break its high of the day? Well, you had two of them. You had one at 547, and you had another one here at 621. So let's look at this one. Right here. 621, 620, let's call it 620 even. 620, 621 and change. Where was ES when gold was breaking the high of the day at 621? It was way over here. 621 was over here. Way over here. Would you say that this is another case where on this box here and this box here you could have loaded for bear? Now, when I say load for bear, I have to be clear. I'm not talking about 1 or 2 lot. I'm talking about 4, 6, 8, 10 lot. If you want to make serious money, you got to get ready to start leveraging up here. So you can do the math. I'm only going to do a couple of them. You can do the rest yourself. 3 lot. 1,500, right? 4 lot, 4 contracts, right? 2 bones, 20 bones. And that's just one trade. I mean, you can extend it out. You can take it out to 8 or 10. You can do the math. You can find out where you're at. Could you make $4,000 on a trade on ES? Yes, pretty easily. Let's suppose you only did 4 lot there. Let's suppose you only did 4 lot here, which was 20 bones. And then you missed the scalps. You didn't get that one. You didn't get that one. But you took this one right here. And you took it all the way to the low of the morning because gold was already way up here. By the time this broke down here at 635, gold was peaking right here. Don't overthink this. This is about as simple as it gets. I didn't even put NASDAQ or YM on here. I figured this morning I'm just going to keep it as simple as possible. I'm going to try gold moves directly to ES moves. And it moves ahead of time. Every time it has moved over here, it has been at least 2 minutes before these moves happened over here. This other short we said was it 9? Yes, short. Plus, what did we say, 9 handles? 9 points. One lot. I'm only going to do 2 of them. You can do the rest of the math. 9 bones. 18 bones on a 2 lot yo. I mean, even if you missed, even if you missed everything that happened over here, you missed this trade, you missed that trade, you missed that trade, for whatever reason, and you saw the correlations, and you saw gold breaking the high of the day when ES was sitting right here. Could you load for bear? Could you put a 2 lot on here and make 1,800 bucks? Yes. If you were looking to get funded in one up trader, and your profit goal was $3,000, you're 2/3 of the way there on one short. Oh, no, you're right. You're right. I doubled that. I'm sorry. I was thinking that's 450. Yeah. 450. Sorry. And 9 bones on the 2 lot. Yeah, you're right. Yeah. Sorry. Good catch. Yeah. There you go. That's correct. Yes. Yes, you'd be almost 1/3 of the way on a $3,000 account funding for 50K on one up trader. Geo, the stops are located above the swings. So if you use Object Trader, when you get filled short, or even manually on a limit order, you would come above this swing and put your protective stops above here. So in the case of these shorts here, your stops would be here, real tight, not loose. Because, if it flips for some reason, then, you're going to get out of it quickly. If a tweet comes in or, something, some other later news event pops up on Bloomberg or whatever, so your stops, your initial stops are very tight. Let me see, there's some questions. Adam, I'll show you that in a second. Adam's question is the deeper retracements, and I'll show you that. Yeah, the good stop. You see where the initial stops are, Mark? Geo? Up here, you know, in this initial one, your stop would be above line 2 right here. You're filled short in here, and your initial stop's very tight right up in here. If it took out line 2, you'd be out. That's the initial stops on that one. If you use Object Trader, whatever setting you have in there, if you have 10, 12, 15 ticks, it's going to put it, you know, it might put it like way up here, depending on where your fill was. And if it does that, you simply manually drag it right back down so you keep it tight, right? Yeah, so these are all filled short like in here. So this one's filled here, you know, somewhere in here. Could you put a limit order there? Yeah, of course. Could you hit a market order when it kisses the midband? Of course you can. There's many, many different ways to get in here. You don't. We have the Object Trader tool. It's a great tool to use. You know, you don't have to use it. There's other alternatives available to you. This one would be short right in here somewhere. Initial stops would be up here, above the wick of that candle. See it? Kevin, yes. Yes, you missed the first half an hour. For all you that come in late, there's a ton of people in here and a bunch came late. Don't worry about it. Don't sweat it. I was saying earlier, give me about a hour and a half to render it. I'm going to target around noonish to get the recording out to everybody. So watch for your email this afternoon. This recording will go out to everybody. Okay? Any questions on the correlations between gold and ES and how you can use the advanced movements on gold to predict and take directional positions short on ES when gold is moving so quickly to break the highs of the day and finding support as it did here. Now, could you take these gold trades too? Of course you can. You could take the gold trades, and you would find that if you were long gold here and long gold here and long gold here, that you would be already up on the gold trade as you were entering the ES shorts, adding further confidence to your shorting of ES over here. Now, let's look at when the market reverses. Let me show you, here's what I'm going to do. I'm going to do a little exercise. Let's do a little exercise together because I think these are, when you look at it, I'm going to reconstruct real time from Friday morning on gold and ES. But what I'm going to do is I'm going to move gold first. Okay? Any questions before I move on? I'm going to move on from here. Any final questions on this? Because we're going to do an exercise together. Okay? If you want to keep it simple, Geo, I would, that's why I did this today. I know I've shown other correlation webinars where I tie NASDAQ and YM movement to ES. I tie NASDAQ and YM movement to gold and ES. I think if you want a very, very simple system to use that you can put on one or two screens and not focus on watching NASDAQ and all these other charts, this would be a good one. So what I'm showing you is I'm recommending that you trade ES based on the gold signals. Yes, Kevin, normally it leads. In this case this morning, it's been up to 5 minutes. Between 1 to 5 minutes, gold will make the move first. Now, that doesn't happen perfectly every day, okay? There are days where the correlations don't work. We saw one day in the past, like 3 weeks, where it didn't work. But most mornings it works. The times when they start becoming less reliable, John S., is I've noticed after about 8 or 9 o'clock when you get into that mid to late morning, and then they sort of line up again into the close. So you can find in the mid to late morning period where the volume goes down, that the markets can drift around a little bit and the correlations may not be intact. There can be cases where they both go down and both go up at the same time. So I don't trade that period. But normally by the end of the day, they sync back up. Well, it's not how far gold goes before you have confidence in it, Trifone. What I'm showing here on the left is, hold on, let me come back before I move on. Okay, stand by. That's a good question. Let me answer that. All right. The way you can use this, and like I said, try not to overcomplicate this because it literally is this simple. All you're looking for over here to the left is what direction it's going. Think of it this way. If you're not going to trade it, then you're just going to use it like a GPS signal. The GPS signal is telling you what over here? Up. I am going up. I'm getting higher highs, higher lows. My background is green. I'm breaking highs of the day ahead of when ES is. This break here occurred at 547. Where was ES when that break occurred? ES was way over here. Dinking around the midband, setting up more shorts. Right here. Right here. Down here like that. 547. Right here. Retracing back up to another short. Retracing to another short. Gold breaking the high of the day. Gold breaking the high of the day. Are you trading this? You don't have to. You can, but you have to have the skill sets to be able to juggle two instruments. Do you need to trade gold to make this kind of money on ES? No. No. This is your GPS. This is your roadmap. Let's say hypothetically, you're here in San Jose, California, and you want to go to the city. So you type in Mission Street, San Francisco, and you pull up your Google Map or your Siri application on your smartphone. And if you've seen this before, what does it look like? Well, they have, take a left here, take a right, take 101 north to, the Mission Street exit, and it shows you a path. There's an actual arrow on your screen. So think of gold in this scenario as your GPS application. This is telling you what direction you should be trading over here, realizing that it is an inverse relationship. Any other questions? I need to move on. I'm running out of time here. Let's wrap this part of it up. Yeah, Trifone, I wouldn't juggle 4 or 5. I'd narrow it down to these two if you want to keep it simple. Yeah, you don't have to have 15 charts on your screen. When I do these correlations in the future, I'm going to keep it really super simple. Yeah, we can talk about it Monday if you want to get into more detail. I'll do a recap on Monday morning after the trading's done, and we'll look at it right after a live market on Monday, okay? All right, let's do our exercise. Here we go. In this exercise, I'm going to move gold. And then before I move ES, you're going all to help me make a prediction. Are you ready? Here we go. Now we're just watching. We're observing here, right? We're observing. Okay, now for now, it's still consolidating. Here's 7 a.m. By the way, you hear me say this a lot in the room, okay? 7 o'clock Pacific, many mornings can create what's called a key reversal. A key reversal is where you put in a high or a low of the day, and then the market reverses. Now, it's not, just to be clear, I'm not saying that is hard and fast, chiseled in granite rule. And it always doesn't happen at 7 o'clock. You got to give it 5 or 10 minutes either way. Sometimes I've seen key reversals at 6:50. Sometimes I've seen them at 7:10. I use 7 as just kind of a benchmark. So what I'm going to do is I'm going to put a horizontal line right here at 7 a.m. Pacific, like this. Okay? All right, and we're going to advance the market, gold from here. Okay, there's 7, right on the button. All right, and we're hitting the highs of the day. Boom, boom, boom. See it? Okay. All right, here we go. Uh-oh, Big Jim. Oh, Big Joe. What just happened there? All right, let's keep it going. Ooh, Big Nilly. What's going on there? All right, let's keep it going. Oh, 743. What's going on there? Anybody? What's our observation of what's our GPS telling us? What's the GPS telling us? What you got your Apple iPhone and Siri's talking to you, right? Your Google Maps application is saying, ho, Big Jim. All right, now we're going to predict. Next, we're going to predict ES. After 7 o'clock Pacific, what direction should ES go? 5 seconds. Up or down? 5 seconds. What is your prediction? What say you, team? After 7 a.m. Pacific time, when I advance this ES chart on the right, based on what gold has done, to the right of this horizontal line, so let me be clear about what we're asking here, okay? So to the right of this horizontal line, which direction did gold go after double topping at the high of the day right here? Good. Gold went down, like such. Now, when we advance this ES chart, our anticipation is that at or around 7 a.m. Pacific, ES should go what way? 2 seconds left. U for up, D for down, when we advance this chart to the right. 1 second left. Cast your vote. U for up, D for down, based on Goldie. Time's up. Up. Yes. Let's not talk about the trade setups just yet. We can look at those in a minute. Right now, all we're trying to do is use the gold market as the GPS in forecasting or portending to us what kinds of trades we might want to take on ES. Now I'm going to start advancing the chart. Now you tell me, or the team, you step in and type in an R when you think the ES has reversed and is heading in the direction that we are predicting. I'm going to start advancing the chart. You're going to type in an R when you think you see it. Ready? Okay, here we go. And we'll track it time-wise on the bottom part of the screen. 6:30. Okay, so we're 6:35 and change. Here we go. Watch the time, right? Okay, watch the time and watch what the market does. Here we go. 6:36, 6:37, 6:40, 6:43, 6:46, 6:50. 10 minutes to 7 a.m., right? Okay, here we go. Okay. 6:59. At 6:59, where is ES located at 6:59, 1 minute to 7 a.m.? What is that? What does that white dashed line mean? What is the white dashed line, everybody? Off the current day OHL indicator that you can use from Ninja straight out of the gate. It's hitting the low of the day. It's hitting the low of the day at 6:59.7701. Just for giggles, I'm just going to put a horizontal line right at that demarcation point of the hitting the low of the day at 7 o'clock right here. Okay? Just for giggles. There we go. Here we go. Breaking it by a tick. Breaking it by a tick. Whoa, Big Jim. Uh-oh. Uh-oh, Big Joe. Whoa, wait a minute. There's 7-Eleven. What's going on here? Ooh, hold up. Hold it do. Hold it do. Oh, what's that? What the heck's going on here? There's 7:24, 7:25, 7:26 a.m. Pacific. Watch it. Whoa, what was that? 7:39. Uh-oh. 7:43. 7:58, 8 o'clock. What do you think? Can you see the correlations now? You see them now? Let me continue to show this. There you go. All right. Now, were there any long trades that set up on ES? And if so, after the key reversal right around 7 a.m. Pacific, both at the highs of the day on gold and the lows of the day on ES, was there long entry opportunities on ES And if the answer is yes, how many are there? You got 5 seconds. So the question is this. To the right of this horizontal line, how many long trade opportunities set up on ES? 4 seconds left. Type in a number, count them up. You don't have to say where they're at or what time they occurred or the level you got in or what kind of type of trade. You don't have to say any of that. Just how many are there? Counting long trades on ES to the right of the horizontal line. After 7 a.m. key reversal, with the gold market heading down solidly, how can we confidently take some ES long trades? Three seconds. You should be able to see these by now. This is part 2 of the 2-part series. We covered this extensively on Thursday night, and we've shown a lot of trades here this morning. So this should be pretty, you should have a good confidence level in taking these when you see them, say, Monday morning and next week when you get ready to trade these markets, okay? 2 seconds. Counting long trades to the right of the horizontal line. 1 second. I see your comment there, Ken, and that makes a lot of sense, but we're just counting where long trade opportunities could be. That's all we're doing. 1 second. Time's up. Now let's look at where ES paused and gave us. I'm going to show you what I consider to be the 2 obvious long trades, and then we can talk about some secondary trades that you could have seen and taken. How about right here? How about this box right here? What do you think? Okay, that pop there was at 717, 719. Let's go over here and look at where gold was at 719. 719, 719. Gold was down here. Okay, so gold at 719 was somewhere right in here. Oh, oops, what the heck was that? Ooh, I didn't like that, whatever that was. Hold on, 719. Yeah, okay, so right about in here. Plus or minus a minute or two. Yeah, so gold had already, what I'm saying is this. Let me be clear when I show this, okay? What I'm trying to impress upon you, and you can start to see for yourself. There was clearly a shelf of support that had built up around this consolidation period on gold right in here. See the shelf of support on this consolidation patch where it double topped right in here? And so the break actually occurred on gold. I would call it at 706, right here with this breach. This break right here, I consider significant in the fact that it had held since 6:19 in the morning. So what I'm referring to is this break between 706 and 719 had gold looking like this at the time. Where was ES from 706 to 719? It was coming up through here. 706 was right here on ES. $706 was like right here, somewhere right in here. So this was happening on ES when this was happening on gold. See the two? Yeah, I'm not looking at that at all, David. We're not looking at phantom trade setups. We're not talking about trade entries. We are going to talk a little bit about trade entries on ES, but we're not. I just said it a minute ago. Maybe you weren't here. This is our GPS indicator, right? This is our GPS indicator. We're not necessarily looking to take these trades. We're not diagnosing the chart. We're not trying to figure out phantom trades. We're not doing any of that over here. Now I did show where there were some trades. Okay, I did show that. Could you have taken them? Yes. But that's not the point of this chart. The point of this chart is to be seeing, is this telling me something that I could be doing on ES ahead of time? I take my crystal ball, I shake it up real good, and I put it on my desk in my office, and I gaze into it. And when I'm looking into it, and I look at it, and it starts to show me a GPS roadmap that I plugged into my smartphone, I see something that looks like this ahead of time. 706 is the break, and by 719, gold was already ripping down like that. Was that portending that this was eventually going to break up here on ES? Yes. That's the point. That's what I'm trying to show you. I'm not angry about it, by the way. I'm just excited about it. These correlations are so good. I'm telling you, most mornings you can take this to the bank. Was this a solid long trade? Yes. Did you know ahead of time it was coming? Yes. Right here. Could you bought a market order right here? Of course. Limit order here or a box? Yes. By hook or by crook, you're long here. And you knew from all the way down here that it was going to break because of what gold was doing. All the way from that oval to that oval was portending what eventually was this long breakup. Does everybody see that? I'm trying to keep this as straightforward and clean and simple as possible. I'm not trying to overcomplicate it. We're not analyzing the gold chart for trades. That's not the purpose of that chart. Although, like I said, you could trade it if you have the wherewithal and skill set to juggle two instruments, by all means. Now, after this thrust up and the background turns green, bars are predominantly blue, mid-band and all the bands are stair-stepping up. Was there another retracement? Of course. It was right here. That was money. That was just money. I mean, if you went into Wikipedia and drew up a chart and said, okay, show me a textbook mid-band long trade correlated to gold, and the market's set up perfectly for it, it's that one right there. Right there. Now, how much money did that make? Well, let's see. Let's do some quick calculations. All right, let's say you got filled at, so what we're talking about is this long trade right here. From here to here. I'm just going to do a quick calculation. I'm running out of time. I got like 4 minutes left. So, I don't know, 32 and a quarter, 32.50, you're filled long. You had an ABC pattern. Could you have taken this little pullback where it bounced off the top of the box again? Of course you could. Could you have been filled on this bar with a limit order box or market order? Of course. By hook or by crook, you're long again right here. Okay? Right? We get in, we go all the way up here. We apex at 42 and a quarter. You probably got out more around like 40 or even 39.50. In fact, I think I called this trade. Or no, we were out of the room at that point. Let's do a quick back of the envelope calculation. 32 and a quarter. And you get out at, say 32.50 to 40 is how much? 7.5 points. All right, so let's do a quick break out your gonculator and help me out here if you would, please. ES long plus 7.5 points times $50 per point. Those of you with the gonculator. So one lot would be how much? How much? 375. Is that what comes up to, Gene? Let's see. 350. Yeah, 375. Okay, so that's that one. And then you had to put the 2 on, 2 contracts. We'll put you right at 750. Yeah, 2 lot on the 750. I mean, I think that's pretty good. I mean, we're not counting anything. No gold trades have been counted in any of these calculations. I didn't even count this long right here, which was probably from 31 to 36, depending on where you got in. You know, another couple, 3, 4, 5 bones. By the way, if you counted these as minimum criterias, you were correct. You only got scalps out of them. You know, I'm just going to draw a box like this, depending on how you looked at it. Were those minimum criteria trades? Yes. Did you get some scalp out of it? Yes. if you didn't get this initial entry. If you got this initial entry, you were just kind of managing it through here until you got this deep retracement long here off the mid-band for that one right there. I mean, you know, look at it this way. You could have slept in and missed the entire morning, all those huge trades right after the news. You could have missed all that. And then at 8 o'clock, you come in and you're watching the market here. You're watching gold just tank. And you're watching this, and you miss this one. But, you know, you're patient. You're patient. Patience is the key, right? And you patiently wait like a little sniper in the weeds. And sure enough, you get a beautiful long setup, textbook at the mid-band right here, right there. You take that pop, you get out with a couple of contracts, and you're up 7 bones on one trade. And you missed the first hour and a half. I say it's a pretty good deal. I don't know. So let's recap, and then I got to go. Using gold as the leader on Friday morning, you had many good trades that set up on ES that you could have taken. The first of which was this one right here. This was money right here. This was money, this trade. Solid, no heat, no heat. Didn't even get close to your initial stop. Didn't even get close to it. Went straight down in your favor. Could have been a 10 handle trade right out of the gate. Put 4 lot on there, you got 20 bones. You're done by 5:36 in the morning. You don't even have to trade the open. Okay, so you missed that. That's okay. We got some beautiful retracements here. You got this kiss and roll off the mid-band. You got that kiss and roll off the mid-band for a scalp. You turn around, you miss those two. You take this one right here, minimum criteria short, and it goes and breaks the low of the day right after gold had already broken. Textbook, beautiful short. I didn't even count these. Were these 2 more shorts? Yes. Were these long trades? No. These are what are called deep retracement or phantom trades, where the mid-band is flat. You're going sideways, but the trend is still down. I didn't even count these. So let's just put those on the side. Did you make money off of them? Of course. This one broke the low of the day right here. Now look, I realize that some of you struggle still with the fact that you're above the mid-band in a deep retracement condition and the bars are blue. You might be thinking trend change. But as long as you stay under this swing right here, line 6 in that swing, you were still shorting this market. Okay? This is still shorts right here. If you're not comfortable taking deep retracement trades, do you have to take it? No. Were they still short trades, legitimate short trades? Yes. You know, if you might have to take a little time to learn how to take those, but it's worth learning. Then we saw gold start to break down very precipitously, and it started right here at 706. Pushed ES right up to the mid-band. And based on what gold was doing, we could go ahead and take this long trade now. This gold had already ripped down like probably at least 30 or 40 ticks. You get this pop. Let's say you missed it. You come in here right after 8 o'clock. You see it sitting right on the mid-band, and you take this long trade right here, right around 32. Comes up, pushes through 40. You stop out at 39.50, maybe somewhere right in here. For almost 4 bones on a 1 lot and a little over 7 bones on a 2 lot. I'd say, I don't know, but that's a pretty darn good morning. What do you think? I'd say it's a pretty darn good morning on ES right there. Well, let's see if you took all 3. Well, let's see if you took 2 lot on here, that's 10 bones. 2 lot here, you're at 1900. And a 2 lot here at plus 750 is 2650. $2,650 less commission would be a pretty nice morning on 3 trades on ES. And you're done by 8:30. I'd say that's a pretty darn good morning myself. And gold led the way. You can, Adam, you can. That's what I was saying. Adam's asking about these deep retracement trades. You know, what we would suggest is if you took this trade and maybe you skipped the scalps and you jumped in here and caught that trade and you're up maybe, I don't know, 15, 18, 1900 bucks less commission. Do you have to take these deep retracements? No. I mean, you can sim them or put a couple of micros on if you want some skin in the game. Yeah, of course. Are they tradable? Could you practice on them after you made money? Of course. They're right after the open. They worked out perfect. Did you have to take these long trades over here? No. Now, if you skip the whole morning and you want to make some money, well then, yes, of course, using gold correlations, you would be taking these long trades. Right. Yeah, gold is tough. Gold targets and ES targets. Well, when you're scalping like this, let's use this consolidation area as an example. You can obviously see that your support level had been established here in this little trading range on ES. So this would be your targets for your short scalps. And in this case here, you got a runner. So you got the scalp off and you got a runner down to the fresh low of the day. Right. Okay, let's see. I'm beginner. Can you say something for me? Trade ES. Trade ES mid-band trades. If you are brand new and you are learning this system, trade ES mid-band trades. You can look at some correlations. You can listen to calls in the room. But if anybody's learning and wants to do the very first thing, and you say, what would be the first thing I should learn and do? It would be ES mid-band trades only. Nothing else. If you master these trades, I've showed you here on this Friday morning, 1, 2, 3, 4, 5, 6 6 trades in total, not counting that one and not counting these two, that would have made you money trading ES using gold correlations. And every one of them made money. Start off with some micros, start off in sim, work yourself up to a full contract. Eventually you can go 2, 3, 4 contracts. Once you get a high confidence level up, trade micros. They're only 1/10. A micro is $1.25 a tick. Even if you got popped for 10 ticks on a micro, you lose $12. But it's a good way to come out of sim, because while you're in sim, you can still be a little bit lazy in how you trade it, right? Oh, it's sim money, whatever. I lost $100, but it's sim bucks. I don't care. Well, when you got the micros in, that's still real money. So, what I'm saying is, over here, for instance, in this example, instead of a 1 lot, 2 lot, 4 lot with full Monty, you could do 4 micros. 4 micros would be 4 times $1.25, $5 a tick. Yeah, so it's not $12.50. It's half the risk, but you still got skin in the game. So you start to get the feeling of real money. ES midband trades for starters. Anybody who's learning and starting off, ES midband trades are the go-to trade to learn this system on an instrument that doesn't move too fast, gives you plenty of time to see the trades, respects swings all morning long, and isn't so whippy. I'm so used to NASDAQ, which has been killing me for 7 years. How hard do you think it would be to patient to switch to ES? Adam, that's a great question. I'll tell you what, I have trader friends that I talk to occasionally throughout the day or after hours or whatever, and they're NASDAQ traders, okay? They love the high octane of that market flying all over the place. They get a thrill from it, both from a positive and a negative point of view. Positive in the fact that it gets them excited because it's moving fast and you can make a lot of money very quickly. 100 tick move, 200 tick move on NASDAQ's nothing. And it can do it in a matter of minutes. But, if you want to take heart medication every morning and worry about having a heart attack because it's ripped you're upside down 5 bones in 2 minutes, then you want to avoid NASDAQ and use it as a GPS roadmap. Mohammed, I can't do that, buddy. The way to work it with this team here is to learn the system, come to the webinars, watch the webinars, come into the live room, see the live trades, and then our whole idea here is for you to be empowered to take these trades on your own with the chart right in front of you. That's why we spend, hundreds and hundreds of hours teaching this, because we want you to be empowered to see it yourself. When you come into that live room, hold on, I'm just going to stop the recorder. Stand by.